Welcome back to the floor of the CME Group here in Chicago, April 29th, the royal wedding. Big day over there across the pond. Congrats to William and Kate. I'm sorry I couldn't get away from the CMZ. Really had to be here today, so I regretfully was not able to come over for the celebration. But nonetheless, it was a spectacular event. My wife was really excited about the dress, so hopefully you got to catch a little bit of that. But let's talk about the markets here. The markets here are celebrating. You know, we continue to see these markets rally. You know, we're kind of digesting the whole Ben Bernanke, but let's look across the board here, folks. Gold, all-time high, 1542. The NASDAQ, the Dow Jones, the S&P, all these are at multi-year highs. You know, you look in the S&P, they really wanted to go for that 1363 level in the big contract, and they got it. You know, crude oil, 113.50. The VIX still kind of sitting down there at that 15-ish level, but we're looking at the 8th day in a row right now for the equity market rally. Now, what else is rallying? Well, treasuries continue to rally. Let's look at this 10-year. You know, they're knocking, they're thinking about going to 3.25 here. We've been flirting at that 330 level for a couple days. So that continued grab into the treasury market is a little bit of a red flag we continue to see, but nonetheless, like I spoke to last week, above 1338 in the spook, no reason to be short. I mean, it is absolutely remarkable, this move in the S&P. You know, and I think that kind of goes to how is Uncle Ben balancing this whole thing? You know, if a traditional scale, let's look, you know, you have one balance, one platform here, one platform here, and one evens out the other, correct? Well, I think Uncle Ben is sitting here, and he's got about 10 or 15 different platforms on this side. He's trying to balance and juggle the whole thing. And look at what the US dollar index continues to do. It's on its lows, multi-year lows, I think back to June of 2000, July of 2008. And at some point, when will they have to step in? I mean, is it 72? Is it 70? But this US dollar index has actually kind of created the S&P and the equities as kind of a safe haven. So you see the gold grab, you see the silver grab, you see the treasury grab, but you're seeing the stock grab because Uncle Ben has beaten up the US dollar index so much that it's the continued implicit bid. So I'm not trying to be a bear up here, but I'm trying to get my arms around how can we continue to have this rally and sustain this rally that is off of a policy, not off of fundamentals. You know, comment here in this video, is this actually sustainable up here at 1358 right now in the S&P? Let me know or get me at the killer on my Twitter. But I really see a lot of earnings this week, and I think things are even a little more convoluted because some of these big multinationals are actually reporting in dollars to make it look even better due to the fact that the dollar's been getting crushed. So a lot of moving parts, thinking maybe we see a little bit of a profit take this afternoon, but I'm not guaranteeing anything because it's been up and away. From the floor of the CME Group, have a great weekend. I'm the killer. Remember one thing for the rest of the day, be the hammer, not the nail.